Hi everyone, this is Mike Kramer of Mott Capital. Today is December 5th. It's around 6:30 p.m. Eastern. So tomorrow we'll be getting another bunch of data points coming in the morning, with starting off with MBA mortgage applications and ADP employment. We're looking for 130,000, up from 113,000. Then we'll also be looking for non-farm payroll and unit labor costs and trade balance. But the big data point tomorrow will be this ADP employment change. The productivity and unit labor costs are basically just the third quarter final revision. So the big number will be this number. ADP has been disappointing the last couple of months, so this will be an important number to see how that comes out. Also tomorrow, which may be important, is a Bank of Canada rate decision that comes at 10 a.m. Given the news that there'll be the rate announcement, you'll probably want to keep an eye on the Canadian dollar. Clearly, any sort of tone that suggests that maybe the Bank of Canada could be looking to cut rates in the near future could certainly see the Canadian dollar weaken versus the dollar, which means in this case rise. Anything that suggests, rate cuts may be far off into the future could lead to a further decline in the Canadian dollar, which would be a strengthening. And in this case, you can see that the Canadian dollar has come down to the 10-day exponential moving average. And for now, at least the last 2 days, that's been a resistance level. So we would want to see a break above the 10-day exponential moving average to push higher, to give us an indication that this recent decline is fading. And certainly when we look from this point to this high, you can see we've retraced 50% of the decline already. So this would be a spot where you could see certainly the Canadian dollar weaken some versus the US dollar and climb, with the next big level of resistance coming around 136.95 and the big level of support down here around 134.97. One reason why this may have some particular importance tomorrow is because there seems to be some correlation between the Canadian dollar and the VIX index, and certainly when these two are certainly when we see the dollar strengthening versus the Canadian dollar, we've seen the VIX move higher, and when this has been coming down, when the Canadian dollar has been strengthening versus the US dollar or coming down, we've seen implied volatility fall in the S&P 500. So, you get a sudden spike in the Canadian dollar tomorrow, could lead to higher implied volatility levels, could lead to a US stock market moving lower as an aftershock to any sort of surprise announcements out of the Bank of Canada. And certainly it would make sense from a standpoint that you see this type of reaction just because we also know that the dollar index and the VIX have a relationship, and that's not really all that surprising, being that when the dollar is strengthening, it's an indication of financial conditions tightening, and as a result, you typically see higher levels of implied volatility. And certainly the dollar has reached a 61.8% retracement level, and we have started to see it bounce a little. And this could be, again, an indication that maybe the dollar is due to strengthen some, maybe implied volatility in the U.S. equity markets is due to rise some as financial conditions potentially tighten. When we look at the S&P 500 today, we just really had more trading sideways, so we haven't really seen a meaningful change in the direction of the S&P, which leads us to believe that perhaps we're going to get a bigger move later this week, just because it seems like we're consolidating up at these levels. It almost looks like we have a broadening wedge that's now turned into a contracting wedge, which appears to potentially be forming a diamond pattern. Again, something to be aware of. It seems like the range is getting smaller, as before the range was getting bigger. And again, we would want to see really an undercut of this 45.50 level, which was an important level that we noted yesterday, to see if the S&P 500 indeed is going to break down. Like I said, if you get a dollar moving up tomorrow with implied volatility moving up, certainly there is a chance that you could get equity markets moving down. The one thing that I want to point out as well is that when we think about implied volatility, it's important to think about it on different time scales. The one thing that I have noticed over the last day or two is you're starting to see some of these shorter metrics in terms of time frames of implied volatility actually moving up, with the 1 week 50 delta implied volatility of the S&P 500 moving up from around a 7 number to 11. And just to keep you in the loop, that this number, if it continues to rise, could be a little bit of a leading indicator to seeing implied volatility moving up, which certainly, again, if we start seeing dollar strength, if you were to see a Canadian dollar weakening tomorrow, meaning it going higher, that would be an indication that we could see higher, more implied volatility, and that would obviously be bearish and put these levels of support and resistance into play for the S&P 500. Now, oddly, today we didn't really get a very big move in the markets following the JOLTS data, even though it came in much cooler than expected. The S&P 500 and the Nasdaq really didn't have much of a reaction. In fact, you could see that the Nasdaq 100 basically continued to stay right below this trend line that we gapped below yesterday. So this is, again, another sign that this is serving a little bit as a sign of resistance at this point. Meanwhile, you can see the Nasdaq 100 also got up to the 10-day exponential moving average and didn't advance any further after reaching also this trend line. So again, this trend line, 10-day exponential moving average, 15,890 seems to be a level of resistance, while this area down here, 15,765 or so, appears to be some support, with obviously a break of support potentially leading to this gap fill down at 15,490. When we moved over to the Dow yesterday, we talked about the potential for the Dow to kind of maybe just move sideways and consolidate, and that's basically what we got, at least for today. Again, Dow's still overbought on an RSI metric at over 76, but we're moving inside the upper Bollinger Band, and that could certainly be a sign of some cooling in terms of being overbought. Sometimes when you can, consolidation can serve as a condition to take some of the pressure out of the market as opposed to just going down. So sometimes you can consolidate through time and not necessarily have to consolidate through price. And so if we continue to trade sideways in the Dow, that would allow for further this overbought condition to continue to ebb. Meanwhile, with the Bollinger Band moving up, you have to realize the upside potential here is to around 36,500, while I think your downside support comes somewhere around 35,680. So I think overall, that's sort of where we are right now. Two things to watch for tomorrow will obviously be ADP in the morning, and then you'll get the Bank of Canada 10 a.m. that may sort of just supply something in the FX space that could ripple through the FX market and then feed into implied volatility levels here in the US. So anyway, something to be mindful of, and I hope you have a good day, and we'll talk to you again soon. Bye.